And the markets are moving along right here in a Tuesday trade globally and locally. Here's what's coming up. And you see Cameroon, they're expanding their solar power there with a big investment. And the Central African Republic is set to launch a national guarantee fund for SMEs. Plus, gold prices hit a fresh record high near $3,700 per ounce. It's great to have you join us. Let's get a check on what's playing out with oil markets now. We did see pressure earlier on business morning oil market, but that's still continuing right there in the afternoon. $67.32 a barrel. That's what we're seeing for Brent crude, 0.18% down. WTI, that's about marginal 6 basis point drop there last time we took the data. $63.25. That's what's playing out there. And we see for the metals market, it's green now. Let's look at gold. We see it's green on the screen across board. $696, just a little more, just about $3-4 more before you get to 3.7. U.S. gold futures 0.4%. That's already at $3,733. Spot silver $43.18. And we see palladium, that's up 0.33%, $1,228. And we see investors gearing for the rate decision in the U.S. That's coming up tomorrow, and definitely they'll be looking out for what the U.S. Fed Chair has to say about forward guidance. I guess that's what they'll be paying attention to tomorrow. To other issues now, let's look at the African continent. We see South Africa, they've approved a long-term lease agreement for all majors and traders, including BP and Vitol. At the country's key petrochemical hub in Durban, a move aimed at safeguarding investment in energy security. The Department of Transport confirmed that Minister Barbara Creese extended the leases at the Island View precinct, responsible for handling about 70% of South Africa's fuel imports, following a request by the Fuels Industry Association of South Africa. The decision ends years of disputes over short-term lease renewals that have raised concerns among industry players about supply reliability and future investments. I would say the Central African Republic, they've announced plans to establish a national guarantee fund aimed at improving access to finance for small and medium-sized enterprises. According to the Ministry of Finance and Budget, the fund will provide guarantees to local businesses seeking credit from commercial banks, reducing the risk faced by lenders and encouraging more financing for entrepreneurs. Authorities say the initiative is part of a broader effort to stimulate private sector growth, create jobs, and diversify the economy. Obviously, Cameroon, they've added 28.6 megawatts of solar power to their national grid as part of efforts to expand renewable energy capacity and improve electricity access in underserved regions. The Ministry of Water and Energy has said the new capacity comes from recently completed solar projects in the northern part of the country, where power shortages have long hindered economic and social development. The solar rollout aligns with Cameroon's broader energy diversification plan, which seeks to increase renewable generation to complement hydropower, the country's dominant energy source, and meet growing demand. And the principal managing partner at Sunga Bamu Law International, Arnold Sunga, has criticized African leaders for failing to ensure that the continent's mineral wealth benefits ordinary citizens. We're speaking at the third annual Activist Symposium in Johannesburg, held under the theme, Navigating Activism in an Anti-Human Rights Era. Our South Africa correspondent, Innocent Simosa, reports.
The Activist Symposium's spotlight on austerity and aid comes at the critical time in the continent, as the continent grapples with the sovereign debt that is skyrocketing, and of course it is reshaping not only economics but also social justice in the continent. Representatives from across the continent gathered to address the growing challenges facing human rights defenders.
I think the role played by human rights defenders and activists is often, not, regarded as much as it should be. They play such an important role in ensuring that our leaders that have been appointed in government positions are held accountable for all the promises that are made, in the Constitution, in international and regional treaties.
Principal Managing Partner at Tsunga Bamulo International, Arnold Tsunga, has warned that rising debt levels are pushing many African governments into austerity measures with serious consequences from basic human rights, including healthcare, education, and social protection. He adds that African leaders are failing to address these issues.
I don't think that our governments collectively have done enough in terms of using the policy space that they have to restructure legislation around mining. You know that the mining framework in terms of policy, in terms of laws, in terms of practices, it is a colonial invention where the colonialists were coming in order to exploit African resources, basically take the raw materials and process them outside without beneficiation.
Delegate says that striking this balance will require stronger political will, fairer debt negotiations, and greater accountability from both African governments and international lenders.
I think actually what needs to start is if we're going to have development in our countries, if we're going to have mining companies, even from the global north, come and invest in our countries, that, the bedrock of the law is the polluter pays. So as you make profit, as you look into beneficiation for communities, that there is a reciprocal duty to ensure that there is protection of the environment, that there is consideration of climate and climate concerns.
The symposium continues for the next coming 2 days. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
All right, so we have data from financial derivatives companies. See, the price of a tin of sardine in Nigeria has jumped by about 33% in just 1 year, climbing from 1,005 to about 2,000 naira as the Christmas season approaches. What's driving this price increase? Even though we're seeing inflation, that's tending downwards. Let's bring in Faiza Sani, analyst, financial derivatives company. Great to have you on the show. Good afternoon.
Thank you for having me.
So with sardines now costing a third more than last year, how might this, price surge affect affordability for households? It's been a while since I personally had, sardines. Are they going to be affected?
Okay, so we'll see. Sardine is one of the most affordable and accessible sources of protein, and because of that, compared to corned beef, chicken, and even fresh fish. And because of that, it has a fairly inelastic demand. So we would see that consumers would continue to demand these. And because the prices is increasing, budgets are going to be strained.
Right. So, despite Naira gains, exchange rate stability and growth in local fish farming, we're seeing sardine prices remain, stubbornly high. What do you think can counter this?
If we can battle port inefficiencies and if we can battle port inefficiencies and
right.
If we can battle.
Yes, yeah. So I guess the port's inefficiencies definitely, even though we've seen the dollar, the Naira actually stays strong. Stable, but we're waiting for strength, definitely. But I guess, the port inefficiencies, that's also, driving the cost there of sardines. But we'll keep tracking all of that. Thank you so much, Faiza Sani, analyst, financial derivatives company. Thank you for coming on today. All right, let's get a quick check on what's playing out with the markets now. We see the NGX there, 141,789 points, up 0.09%, 9 basis points. But we see the Johannesburg Stock Exchange, that is on fire, at this point, 0.35%, 105,040. That's what we're seeing play out there for the Johannesburg Stock Exchange. Let's get a check down other parts of Africa there, we see the EGX 30. Let's see how that's looking there in Egypt, North Africa, 34,808 points, down 1.02%. Then we see the Nairobi Stock Exchange close in the green yesterday, 0.18%. But let's drill down what's playing out on the NGX now. Intraday analysis. We have Nabila Mohammed, financial analyst, Chapel Hill Denham. Great to have you on the show.
See you too. Good afternoon.
Good afternoon. So we had the latest inflation number yesterday. That's for August. Is this a tailwind for investors, or they don't care?
Oh, of course, it's positive for the market, generally speaking, and it just means that we'll largely see better numbers when we start to look at financial reports of especially the consumers. Because remember that, to battle inflation, to battle effects, some of these companies embarked on increase in prices, and they are not going to roll that back anytime soon, because our new reality, we're just looking at exchange rates along the levels of 1.5. And coupled with the other things that they have done in terms of backward integration, just to support their levels, we have seen that they have rallied significantly. In fact, the consumer index alone has rallied significantly on the year-to-date basis, and we are still going to see more earnings being released by these set of companies that will bode well for investors, because as they continue to report very strong numbers, we definitely see that most of them will start to revert back to their dividend paying policy. And that could also include the names like, Nigerian breweries, just to mention a few. So I think that it is positive. However, it's something that we still have to keep an eye on, because there are still other parameters across the economy that could potentially, thwart the disinflationary trend that we have seen for the past 5 months.
Right, and definitely is rate setting season, globally and right here in Nigeria, expecting a decision from the MPC next week. Do you think investors are trading around, this season, or they're just just trading as usual, not minding what's going to happen with interest rates? How are you seeing it?
So I think in the markets for now, we're seeing more activity or more reaction to the inflation results in the fixed income space, because currently we're seeing 1-year paper trading below 17%, and that is not what we had previously. And I feel like this will factor or play a very huge role when we see the NTB auction that is meant to happen tomorrow, because at the last NTB auction, the 1-year paper was well above 17%. That was the stock rate. I won't be surprised if I see that come down to around 16 levels tomorrow based on the auction. And that is just investors, trying to position well ahead of what will likely happen to interest rates. Aside that, there's also been cues from the central bank in terms of the OMO bills that they have been issuing recently. We've seen them come out with several OMO bills of around 80 days bill, not necessarily a 1-year bill. And that just speaks to the fact that they are looking to lock the high interest rates within a very short time, and not looking to extend it to around 360 or 180 days for long. That is already telling us that indeed the outlook is, that interest rates will, come down going forward. So investors are indeed pricing that in as well.
Right, and still looking at the MPC and the decision coming up, we've had a stable currency for the longest part now. Inflation tending downward, with the rebased data. I guess this is a perfect storm for the MPC decision. That's a cut, right?
So in our view, in-house, we still think it is early to cut rates. And like I mentioned earlier, there are still other factors that they would have to consider. Yes, you're right, we have had stable effects. We have had disinflation for 5 months now. But then there are still pressures, and we would have to watch out for those pressures. Those pressures include what is happening across the globe, include what we are seeing on a month-to-month basis. Even if August month-to-month was, solid, if we're looking at just the trend of maturities and that will keep the system from a demand side, there could be a resurgence in inflation. So it is still too quick for us to start to see the MPC decide to, cut interest rate. And again, we are also looking out for what the Fed decides tomorrow, rather, when they finish their own, monetary policy meeting that started today. So when they finish it by tomorrow and we see their decision, that could also further serve as something to be considered in the meeting for Nigeria next week. However, we will not be surprised if we see a cut materialize in the November meeting and not necessarily in this meeting. But for now, we are still thinking that the committee will likely remain, on the whole side, except if we see some of the factors, especially the U.S. Fed meeting, go dovish in their stance.
Right, and with what we're seeing play out so far, let's look at the intraday trade now in the market. Which stocks are getting attention from investors right now?
So we're seeing activity in Guinness. We're seeing Guinness, up around 6%, and that is just investors taking position well ahead. Like I mentioned earlier, that the consumer space is largely going to be positively impacted by the inflationary trend that we're seeing, and this is just them taking position well ahead of what happened. And even yesterday, we saw the likes of Unilever, we saw the likes of Dwarf Foods, all edging higher, and these are consumer names. These are names that are in the consumer goods space. Now, if we even start to talk about the other giants, like the telcos now, especially MTN, that has shown us in H125 how it significantly recovered from its losses. It's looking like it would for another potential rally when they release their 9 months results. So all these, I think investors are, sort of paying attention to in order to largely take their positions right.
All right, investors need to make a decision regardless. Thank you so much. It was great having your perspective. Nabila Mohammed is financial market analyst, Chapel Hill Denham. Thank you for coming on today.
Thank you for having me.
All right, let's get a quick check on what's playing out with the Gulf markets. Now, see for Dubai, that's about 6,010 points, down 0.5%. Abu Dhabi index 0.11% to the good, 10,047 points. Let's look at the Saudi Arabia and Qatari trade right there. We're seeing Saudi Arabia marginal drop there, about 0.07%. The Qatari index 0.19%. So it's a mixed picture right there in the Gulf region. Let's get a check on U.S. market now. S&P 500 futures are flat today after the Senate confirmed President Donald Trump's pick to join the Federal Reserve as Stephen Merritt just one day before the central bank meets to consider whether to cut interest rates. And we're seeing the impact there. The tech-heavy Nasdaq, that's looking better, 0.36%, 24,636 points there. We'll get a summary now from our correspondent Mary Bird for yesterday's close.
The U.S. stock market went to new heights on Monday as the Dow Jones was up at 0.1%, the S&P 500 up at 0.5%, and the heavy tech Nasdaq up at 0.9%. Most of this is due to the fact that we are seeing some trade talks between the U.S. and China beginning in Madrid, and also much anticipation for some decision with the Federal Reserve toward the latter part of the week. As investors are continuing to watch how this week will unfold, as many hopes for a strong stock market for the rest of the week.
Thank you, Maria, for that. But let's get a check on Asia now. See Japan's benchmark Nikkei 225 surpassed the 45,000 mark for the first time, leading gains in Asia-Pacific markets after President Donald Trump said that the U.S.-China trade negotiations in Spain were progressing well, and we saw that move there on Monday. 44,902, that's the Nikkei. That's close for today. Kospi 1.24% up. The Hang Seng Index that was marginally down by 0.03%. Let's look at the other markets we tracked there, and definitely the Nifty 50 there did get to about 25,000, about 200 points more for the highs that it got to there, 0.44%. That's for the Nifty 50 in India. And Shanghai Composite, 4 basis points to close 3,861 points. All right, let's get a check on what's playing out in Europe now. We have Lars Holter with the details. Great to have you, Lars. Let's find out how the markets are looking there. Investors, on the sidelines in Europe waiting for that big decision this week.
Yes, Ladi, they're still waiting, and it's incredible what we're seeing here because it's the same story that we have every day. Yesterday, you might remember the DAX was up. So what do you think, Ladi, what we're seeing today, the DAX being down by just about the same amount? So the index truly is staying true to itself, is sticking to this very tight trading range. But I did read an interview with an analyst earlier today who said that he's heard from many investors that they're afraid to position themselves on the wrong side of a potential trade. They're apparently expecting the DAX to at some point get out of its sideways pattern and actually make a big move, but they can't tell whether it's going to be to the upside or to the downside. And this feeling, Ladi, well, you know, it's an admission that the market is really hard to read in such chaotic times with tariffs and all the other issues that we've often discussed here. This feeling is apparently why we are not seeing much business in Frankfurt today.
Well, I guess, you know, when you can't find a direction for markets, is either you stay out or you dollar cost average. I guess you just have to do something. But we see the EU has made some decisions with regards to the auto industry there. What are you hearing out of Brussels?
Yeah, indeed, Ladi. And what a roller coaster it was for the car bosses. Last week at the auto show in Munich, there was all that optimism and the positive feedback on the latest models. And now there's news from Brussels that is likely shaking them up a bit. The EU says it's sticking firmly to their goal of banning combustion engine cars to be sold by 2035, just about 10 years from now. That's been talked about a lot, but the auto industry never liked it. BMW boss Oliver Zipse always said such a quick policy change could threaten the entire industry. Mercedes boss Ola Kalenius, he said the policy idea needs a reality check. Well, it seems it's the auto bosses who now got a reality check. There are a few exceptions. Of course, the EU is planning to keep combustion engines on the road if they are part of a hybrid drive or as range extenders to otherwise mainly battery-powered cars. And one can only hope that the EU is absolutely sticking to their goal. After all, many industry experts have for a long time said that one reason why German and some other European car makers fell behind in electric vehicles over the past few years was in fact that they had never been forced by the government, by the EU, to go all in on that technology.
So what are the next steps, you know, for the EU and, you know, car makers to get their goal?
Well, Ladi, to go all in for the EU, that means, at least that's what we're hearing, not only to make policy, but to actually invest in the electric vehicle future. After all, automakers are not the only ones that have to make adjustments here. Europe needs better charging infrastructure. It needs better access to batteries, which means the EU wants to invest heavily in research and development, in battery and battery cell technology. Also, they want to create incentives for auto companies to develop cheaper and smaller electric vehicles. That's a sector that really needs some work here in Europe too, especially in overcrowded cities, for example, you know, that already see way too much traffic. It would be helpful if more people would switch to some kind of a city car, maybe in two-seaters. So we're talking about a lot of change for the industry and indeed some cultural change too in a country where for many people a big car is something desirable. Anyway, it's clear that it will take a lot of work to make the big switch by 2035, but at least, Ladi, the European Union seems entirely committed now.
Yeah, we do also like our big cars right here in Nigeria. Thank you so much, Lars Walter, for the details there.
Thank you, Ladi.
All right, let's get a check on what's going on in the crypto market. Now, let's see the color right there. It's, big green for Bitcoin, 0.46%, holding on to the 115,000 level. But on the flip side, Ethereum, that's down 0.49%, $4,506. But major pockets of green across the board with BNB, that's the token for the Binance Exchange, $928. I guess on the way to $1,000 at this point. When there was pressure in the market, I remember that dropped to about $200. But BNB there, monster run for that one. Let's get a check on some of the headlines in the crypto space. Here we see, after nearly 3 years of legal wrangling, Gemini Trust, the cryptocurrency exchange founded by Cameron and Tyler Winklevoss, have reached a preliminary settlement with the U.S. Securities and Exchange Commission. That's the SEC. There, the case centered on Gemini's defunct Earn program, a retail crypto lending product that became one of the most high-profile flashpoints in the NCC's broader crackdown on digital assets there. One of the top stories there. Then PayPal is launching an update to its peer-to-peer, as a P2P payment system that will include cryptocurrency transfers via personalized one-time links as it seeks to make payments universal and increase user growth. The service is called PayPal Links there. You can receive and send money via a one-time link that can be shared in a conversation. Quite interesting. The company said on Tuesday that cryptocurrencies will soon be integrated directly into PayPal's apps. New P2P payment flow with the aim of making it more convenient for PayPal users to send Bitcoin and Ethereum. Now we see XRP, they've been hit by 710% liquidation imbalance in just 24 hours. XRP traders, they've been caught in the wrong side of the market over the last day, with fresh data by CoinGlass showing a big gap between long and short liquidations. In total, $11.84 million in XRP was wiped out in the last 24 hours. Of that, about $10.37 million came from long positions, while just $1.46 million came from shorts. This means there's now a massive 710% difference, showing just how one-sided leverage had become before the market moved against it. So for those traders that like to long and short asset classes, definitely quite a risky one there. But that's how most of the markets we track started looking today. We'll give you the midweek trade tomorrow. Thank you for watching. I'm Lade Williams from here right here at Channels HQ. It's bye for now.